Hi everybody, Sarah here with a summary of the main tax provisions for individuals of the big beautiful bill that was signed into law on July 4th. So of this 1,000 plus page bill, there's some effective starting in 25, others next year, some are permanent while others are effective for a short period of time. I thought it'd be beneficial to break these complicated items down and explain the main points. In addition, we have also included a more in-depth summary as well. So this bill locks in lower marginal tax rates by preventing rate hikes in 2026 and provides additional deductions among other provisions. So let's start with the items that are permanent and then we'll switch to ones that will expire in the future. So starting with the permanent provisions, this means current tax law that can only be changed with passing new legislation. The Tax Cuts and Jobs tax rates and standard deductions have now been made permanent. The lower tax brackets and higher standard deductions that were put in place in 2017 by the Tax Cuts and Jobs Act were set to expire at the end of 2025, increasing tax owed for many Americans. The passing of the Big Beautiful Bill has made these preferential provisions permanent. Brackets have been made permanent and range from 10% to 37%. Standard deductions have also increased. So for 2025, standard deductions range from $15,750 single to $31,500 married filing joint. And these will all be indexed for inflation. For those taking the standard deduction, starting in 2026, a new cash charitable contribution deduction of $1,000 for single and $2,000 for joint filers is available. Make sure you get a letter from the organization that documents the cash contribution you've made. There are also floors and caps to these contributions to be made aware of. All right, next we have the lifetime gift and estate exclusion. These have more than doubled as a result of the Tax Cuts and Jobs Act in 2017. They have also become permanent part of tax code. 2025, the estate exclusion has increased to $13.99 million per person and will continue to be indexed for inflation. Next, we have the child tax credit that has increased to $2,200 per child, subject to income phase-outs. Those start at $100,000 single and $200,000 married filing joint. And finally, we have the qualified business income deduction of 20%, or QBI. Has also been made permanent part of tax code. So now let's talk about the provisions that are set to expire, meaning in effect from 2025 to 2028. First, we have the new $6,000 senior income deduction. So although the elimination of tax on Social Security didn't quite make the final version of the bill, this new senior tax deduction did. It's available for 2025 through 2028 at $6,000 per person that is 65 or older. This means for a married couple, both 65 or over, their standard deduction for 2025 is $46,700. It's subject to income phase-outs at $75,000 single and $150,000 married filing joint. So with this new senior deduction comes some really great tax planning opportunities that we have for the next few years. Next, let's go to SALT deduction caps. So for those that itemize, the state and local deduction cap has increased. SALT are property, state, and local taxes paid throughout the year. This cap has increased to $40,000 from $10,000 until 2030, when it will revert to the $10,000 limit. These amounts can be reduced for those in higher tax brackets. All right, now let's talk about Trump accounts. So for children born between 2025 and 2028, who are U.S. citizens with a valid Social Security number, they'll receive $1,000 in seed money in their Trump account. Contributions may begin July 4th of 2026 at a maximum of $5,000. Parents will still be able to open a Trump account for their children, even if they're born outside of these years, but there will be no government contribution made. All right, now let's talk about auto loan interest deduction. That loan interest deduction is up to $10,000 per person. It must be on a new car and subject to income limits. Also, we have no tax on qualified tips up to $25,000. No tax on overtime up to $12,500 per person. And finally, let's talk about the end of the green energy credits. So we've got a few here. The residential energy credits will expire at the end of 2025. So these include solar installs and energy efficient home improvements, among others. All right, and finally we have the electric vehicle credits that expire September 30th of 2025. Wow, that sure is a lot. To say this bill is big is an understatement. So that's why we thought it'd be best to attach a tax summary brief to this email for further information. If you have any questions or you want to discuss how these changes affect you and your financial plan, please reach out to the office. Thanks for watching.